Hello everyone, welcome back to my channel. Today we are covering analysis on a Kotak Mahindra Bank, one of India's most reputed private sector bank. This is not a buy or sell recommendation. Instead, we will cover fundamental analysis, technical levels and recent developments in the Kotak Mahindra Bank. By end of this video, you will have a 360-degree view of Kotak Mahindra Bank, where it stands now, technical levels to watch, opportunity, risk and fundamental analysis. Let's talk about the sectoral context first. Indian banking sector is going through a crucial phase. Credit growth has been steadily around 14 to 16% year on year. Deposit growth is increasing but lower than the loan growth, which makes pressure on the bank's cost of fund. The RBI has kept repo rate steadily, but with cooling of inflation, there is a chatter that possibility of rate cuts in coming quarters. In this environment, a private sector bank with good CASA and strong assets quality stands differently. Kotak Mahindra Bank, with its legacy, conservative risk management approach and strong capital adequacy ratio, stands out and comes in the picture. Let's talk about the numbers of Kotak Mahindra Bank. Let's talk about fundamental analysis of Kotak Mahindra Bank. Kotak's consolidated net advance in Q1 FY26 stood around 4.45 lakh crores, 14% year-on-year growth. AUM has crossed 7.5 lakh crores, growing up nearly 18%. Book value per share is stood at 829 year-on-year, is a 17% growth. Talk about the profitability. NIM for Q1 26 was 4.65%, slightly lower than earlier quarter. ROA 2%, ROE is 11%. FY26 profit was 22,100 crores, up 21% year on year. Assets quality, gross NPA 1.4%, stress in retail commercial vehicle loans, increased provisional in Q1 FY26. Capital adequacy ratio is at 23.7%, CAT1 is at 20.7%. If we talk about the valuation, Kotak trades 20 to 21 times of PE and 2.7 to 2.9 times of price to book value. Dividend yield as to 0.2%. Let's talk about the recent developments. Q1 FY26 result disappointed. Profit slipped 7% year on year due to higher provisional and NIM pressures. Second is block deal by Sumitomo, which sold its remaining 1.65% stakes around 6,000 crore. And third, stock saw a gap down post result in July 25. If we talk about opportunity, strong capital adequacy ratio, consistent growth in advances and deposit, high CASA ratio, diversified business and steadily BVPS growth. Let's talk about risk and challenges. Margin comparisons due to high rising deposit cost, assets quality stress in retail and CV loans, regulatory compliance and rich valuation versus peers. If we talk about the technical view, 52-week high is around 2300, 52-week low is around 1680, current price is in mid-range, support is around 1700 to 1800 levels and resistance is around 21 to 2200 levels. So overall stock is on consolidation mode. If it breaks on 2300 above level, the stock can reach 2600 to 2700 in the next coming quarters. Considering all this point, Kotak Mahindra Bank is strong but in short term facing some headwinds, margin pressure, provisions and valuation concern. Technically consolidating, waiting for a clear trigger. Key metrics to watch: NIM trend, assets quality in retail and CV loans, RBI stance on rates and investor flows post block deals. In a conclusion, Kotak Mahindra Bank remains the strong private sector bank but faces near-term challenges. This is not a buy or sell recommendation. This is a 360-degree view of Kotak Mahindra Bank. If you found this video useful, like, subscribe and comment which stocks I should cover next. Thank you.